The first quarter, by all accounts, has been a wonderful one, surprising most investors and setting us up for what in the second quarter? Here to answer that question is Steve Hochberg. He's the Chief Market Analyst at Elliott Wave International. Great to have you on Breakout. Appreciate it very much, Steve.
Okay, so you've got this guy from Elliott Wave International. That's Robert Prechter's little quote-unquote research firm, quote-unquote market forecasting firm. That's what they specialize in, forecasting markets. And for those of you who are not familiar with Robert Prechter, well, you've probably done fairly well in the stock market because Robert Prechter has been one of the best contrarian indicators in terms of stock market forecasting in history. One of the best contrarian indicators. If you do the opposite of what he says, you would be doing very, very well. So apparently, I guess Robert Prechter's hiding. He's trying to hide. So he sent one of his monkeys here, Mr. Hochberg, or however you say his name. By the way, Prechter is Jewish, just like this individual, which, of course, I've been talking about. If you look around the financial industry, all the so-called experts that they air on TV, and the interviews you're seeing on Breakout, the Yahoo Garbage, Bloomberg, what have you, the Wall Street Journal, 95%, if not higher, are Jewish. And this is important to understand because when you're talking about an industry filled with charlatans, that is the financial industry and the financial media, people are wondering why they're never getting truly valuable insight from the financial media. Well, you have to ask yourself the question, is it because it's the vast majority of Jewish sources? Either they're stupid or they're trying to mislead you, or is it the media, which is Jewish run? Is it the Jewish media trying to give you the insights of clowns, of deceptive people in order to please their sponsors, right? We all know who provides the vast majority of revenues to the financial media. It's Wall Street firms, precious metals dealers, insurance companies, mutual fund companies, so forth. So obviously the media will make their sponsors very happy if they confuse the audience, right? Or dumb them down, mislead them. And obviously if the guests that are interviewed play that game or just inherently stupid, then it will fulfill that objective. They will be invited to appear in the media more often, and that will increase their business. They'll get free PR. And that's how it works, folks. If you're watching the financial media, if you're reading the financial media, you're an idiot.
What do you think here? The first quarter is going to go down as, one of the best in the face of great skepticism and any number of reasons why we shouldn't have rallied.
Yeah, stocks are in the headline right now. They had a great first quarter in terms of the return, but there's a lot of things that are going on in the periphery that we think are going to have consequences as we move forward throughout the year.
So, it really predates, this rally really predates the first quarter, goes into the late last year. You guys have been bearish for a long time. Do you feel like people are coming to your side now that we're out at these all-time highs, give or take? Or do you feel like people are pulling away from you and saying these guys have been wrong for long, this thing's going to go higher?
You're damn right they've been wrong for a long time. Now, listen to this guy's response. Notice how he tries to cover up their terrible track record. Notice how he makes these bullshit statements, and I'm going to show you how he's full of shit. Let me tell you something. These guys are all liars. They're all scumbags. They're all clueless losers, or they would not be in the media.
Well, we actually got to the top in 2007 very closely. We called the entire decline 2 weeks before the market bottomed in 2009. We said the decline is just about over. Market bottom. We called the low, and we said we'd have the biggest bear market rally since the high.
That's bullshit. That's bullshit. That's bullshit.
In October 2007, we had that, but the market carried farther than we anticipated. Now, we've been up since March of 2009, and I think just recently it's been...
So he's saying they called the bottom in March 2009, and he said, well, it went further than we thought. I don't know about any March 2009 calling it any bottom. I think it's bullshit. because I haven't seen it anywhere. I've looked for it. But I do know one thing is for certain. These guys, if you'll recall, Prechter came out and advised people to short the stock market, the U.S. stock market, by 200% leverage in November of 2009. In November of 2009. Well, let me show you. So here we have an article on Market Watch, which is a bullshit site, complete bullshit. You have to be Jewish to be able to be a writer for there, by the way. Just look at all the writers. They're all Jews. It's pretty much the same in all throughout the financial media. But anyway, and this guy's a Jew as well. He runs this newsletter service. It's a complete scam, in my opinion, where he rates newsletters, okay? And you get all the big con artists, all the charlatans are a part of that shit, okay? But anyway, so here he talks about, and there's other, there's other pieces that show where Prechter came out and talked about shorting the market. There you go, right here. And then so later on in this article, he tries to pump up Prechter, saying how over the past couple of years, his track record, his market forecasting has been the best of all the newsletters he covers. But that also tells you what garbage newsletters that he covers. He covers the newsletter industry, which is all crooks. These guys are all con artists. None of them have Wall Street experience, real Wall Street experience. They're a bunch of snake oil salesmen. So basically, what the article is doing is it's basically saying, hey, this guy, you should follow him because he, over the past couple of years, he's made good calls. So he's basically advocating that investors short the market by 200%. Let me tell you something. First of all, this guy, Hubert, wrote a piece, I think it was after this piece, talking about how Prechter, of the time that he's covered him and his little ratings, newsletter ratings thing over 15, 20 years, I believe it was, he said Prechter had the worst market forecasting track record of anybody. And so I have to believe that this Hubert loser basically came out with an article to trash Prechter after Hubert basically pumped this guy up, and people probably wrote into this guy and said, hey, you pumped Prechter and you basically told us to listen to this guy to short the market by 200% in November of 2009, and I lost my ass. You understand how these people work, right? They're all con artists. These guys are all losers. And without the media, they would not have jobs because they're losers. Their only skill is in lying. They're scumbags, all of them. And by the way, Prechter continued to advise his sheep to short the Dow month after month for several months. I'm not sure how long after that November 2009 call. I don't know when he finally threw in the towel. I don't know. Maybe he still hasn't thrown in the towel. But you can see when he did make that call here, I've got, November 30th, which is a couple of days after he made that call. You can see the market is up 40%. Yeah, so over the next, let's say 5-6 weeks, if you took his advice, you'd be down by 10% by, the first week in January. So let's continue with this chump.
Very interesting because we've seen a wide breakout in optimism in a lot of the indicators we look at, and it's brought people over to our side looking at us saying, okay, you guys think the market's at the end of the rally. Why? What's going on? So I think it's really brought people to read us to try to understand what's going on in the marketplace. So
yeah, people have come to your side. Are you kidding me? Nobody in their right mind who's looked at your track record is going to pay attention to what you guys say. Completely clueless. People, you have to understand something. This Elliott Wave principle developed by this guy, Elliot or whatever, I don't know. I don't know much about it. It's just basically a rendition of technical analysis. And the reason why I don't really pay attention to it is because it's pretty much hocus pocus. It's like voodoo. Anyone who looks at these market cycles and looks at, they have these different designations, super cycle trend. Anyone who actually tries to forecast the market just looking at technicals is just clueless. Complete fucking idiot. Okay? That's a fact. I mean, do you think it's that easy? Do you think? I mean, if it was possible to forecast the market by looking just at technical analysis, my forecasting track record would be 100%. It's about 90%. You don't look at just technicals, and there's no hocus pocus Elliott Wave garbage. And by the way, what's funny to me is that Bob Prechter has this whole Elliott Wave. He didn't develop Elliott Wave. It's somebody else a long time ago. But so he's grasped onto that little philosophy, that mentality. The question I have is, people, if you believe in that garbage, that hocus pocus, what the hell are you doing going to some guy, Bob Prechter, and paying his firm? Can't you learn Elliott Wave on your own? Pick up a book and read it? It's not that complicated. Are you kidding me? So the point I'm trying to make is that Bob Prechter is not even original. He's not even a creative thinker. He just goes by something that someone else developed. Well, the real winners, the innovative thinkers, the guys that know what's going on, they develop their own approach. I have my own approach that's tested over time. But anyway, it's apparent to me that this is basically a PR event. It's apparent to me that this is one of those times where you've got a firm that basically pays to get on here to advertise, and that's all they're doing right now, because obviously you can tell he's like, well, we're getting guys on our side, and you notice how the fat guy set him up. Do you think it's, people are coming to your side now, or are they saying, you guys are still wrong? You see, so it's obvious to me that this is a paid appearance. Let's continue with this moron.
Well, we think we have a pretty good handle on it at this point.
And where is it? Where is the end? What is ahead of us as we get into April? April, historically, the second best month of the year for the S&P and the best single month of the year for the Dow.
Yeah, I think this year might be the exception to the historical norm. I think we're in a topping process. Market tops, by their nature, are very diffuse affairs. As one index makes a high, starts peeling away, another index makes a high, starts peeling away. As it's because the motion that drives a bull market is one of hope, and hope dissipates very diffusely. So I think the market is in a topping process now. It's going to be diffuse. It's going to be drawn out probably through April, and will slowly roll over into the next portion of this, what we think a return to a big bear market.
And finally, I guess if we extend beyond April and we include May and June, they're historically weak months. So that tends to put the second quarter under pressure. Is sell in May, is that going to be the flavor of the month again?
I think it's sell now through May, actually. And as each individual index rises to a new high and then starts peeling away, for example, like the NASDAQ 100 has, which topped all the way in September of last year, one by one, people are going to start waking up saying, wait a minute, something's not right here. Something doesn't feel fluid. I think we're at the beginning of that process now, starting with the NASDAQ last fall, and I think that process is going to continue as we move forward in the spring.
And final question, how much of a downside are you forecasting?
Oh, I think it's going to be a tremendous down. I think there's tremendous risk in this market, and one of the reasons is because no one thinks so right now. Everyone seems to be on one side of the ledger, thinking the market has either started a major bull market, has broken out, and it's going to continue on for years and years and years. And usually when you get everyone on one side of the ledger, you need to start leaning against that and looking at a contrarian point of view. I think the downside potential is quite large right now.
Like, throw a number at me.
Well, I think we're definitely going to get back to the March 2009 lows. I think that's easily doable. It's not going to be immediate. It's going to take some time. But I think once the decline starts, it's going to be fairly persistent. All
right. Very good. Steve Hochberg, thank you very much. Appreciate it. Sobering information, folks.
So he says down to the March 2009 lows. He's saying that's kind of where we're going to easily go there. This firm, Prechter's firm, has been pounding their table to 1,000. And that's what he means, okay? And I don't care what – the market's not going to 6,400. This guy's an idiot. You're talking about a firm that advised people early on in the bull market rally, November 2009, to short the market. Not just short it, to short it by 200% leverage. So in other words, I showed you a chart earlier where you'd be down by January 11th, if you'd listen to that, January 11th, 2010, just a few weeks. That's 11%. If you had shorted the market with 100% leverage, just shorting it normally. If you had shorted the market by 200% when Bob Prechter advised to in November of 2009. By January 11th, 2010, just a few weeks later, you'd be down by 22%. So this is who you're talking about here. This is the same firm. These guys are idiots. Anyone who comes out and tells you to short the market by 200% is irresponsible and is a jackass. Don't ever listen to anybody like that. I would never tell anybody to short the market by 200%. You have to be mentally ill. I mean, think about it. You're coming out and telling a retail investor to short. It's very rare that I'm going to ever tell anybody to short anything. It's very rare. And I can tell you this. I've never told anybody to use leverage to short the market. I always tell people to stay away from leverage. That's completely irresponsible. So why are you getting this irresponsible advice? Because these clowns have never managed assets on Wall Street, which goes back to my point. It's the very first hurdle you must clear if you're going to listen to any of these clowns. They must have managed assets on Wall Street. And I'm talking about separate accounts. Because once you've managed separate accounts, you understand what risk is. You understand what suitability is. You don't tell somebody to short the market by 200%. These guys are coming out to the retail sheep telling them to short the market at 200%. The market goes, biggest stock market rally since the Great Depression. These guys are idiots, complete idiots. And I just want to mention one last thing. For you people out there who have a full service broker, you've got a stockbroker, financial advisor, whatever you want to call them, one of the questions you had better ask them, where do you get your information? And this is especially for the small time brokers, the RIAs, the registered investment advisors, especially those guys because they don't get any Wall Street research really. If they're subscribing to Robert Prechter or Harry Dent or Peter or any of these guys, any of these clowns, you better close your account immediately or you're going to lose your ass. You're going to lose your ass. If you've got brokers who are listening to these fucking clowns, then good luck. Okay? Good luck.